we're going to talk more about how Patrick is reinventing Northstar. I have known Patrick for many, many years, and I used to love visiting his portfolio companies when he was doing strictly PE. And the last one I went to was a tire company, and it was supposed to take an hour or 70 minutes to go from Jakarta to visit his tire company. And it ended up taking 3 hours. So I can fully understand why Patrick thinks the virtual world might be more promising than the physical world today. But Patrick, let's start by talking about how you are reinventing what is by far the most successful, renowned private equity firm in Indonesia and the region of Northstar. When did you first decide that these tech startups are going to transform Indonesia and you needed to be part of that transformation?
So just to put it into context, we have always been a growth investor in Indonesia. Private equity in this part of the world is very different from what we are familiar with in developed markets, where it's primarily dominated by buyout funds. In the early days of our existence, we started in 2006, anywhere between 2003 and 2006. The Indonesian economy was growing at about 6-7% per year. And anything that you invested at that time, whether it's financial services or retail, was growing exponentially. When we bought BTPN, we opened 600 branches in the first year. And we still hold the record of, we are still holding that record. Alfamart was growing at 5 stores per day. So everything was growing very fast. Come 2015, we saw a significant slowdown in the Indonesian economy. Commodity prices collapsed. And we struggled to see real inspiring growth other than this small but emerging theme, which is the digital theme. And we, famous stories that we went to our LPs and we say that maybe we have to have a little bit of a pivot, an experiment in terms of our investing. We carve out a little bit of money. We try to make investments in these digital players. And at the time, we just made an investment with the partners' capital in 2 companies. One is called Grab, and the other one is called Gojek. So we were actually investors in both. And through our partnership with TPG, because we are also GP of TPG in a very small way, we also had an ownership in Uber. So, and I claim that I was the only one that had exposure to 3 companies. But anyway, at the time, it was very early days. Our LPs saw things differently. And so we decided that we just do an experiment. We carve out capital from our own partners' money, and then we do these experiments. And the experiment has done very well. It's a private fund. It's not, we didn't raise money from third parties. But if you benchmark it with even the best fund, I mean, end of last year, I was in this hotel. I listened to the statistics of the returns. That fund actually beat even the best fund in Asia. But it was a very small fund, but it was very successful. It was not so much about the return, what we observed, but actually the quality and the opportunities, the market opportunities and the quality of entrepreneurs. And we also had exposures in mobile phone, in Tree, one of the mobile phone companies here. And we saw that there was a secular growth in this space. So we decided that we should make bigger efforts in this space. So we work with a lot of our friends. The partners became LPs in some of Indonesia's seed funds like East Ventures, in JWC Alpha. We try to position ourselves to be the partner of choice. We work with everybody. And
Patrick,
that's how we started.
Let me stop you there for a minute and ask you a question. When you're a private equity investor, you're looking at mature companies that throw off a lot of cash flow. do you need entirely different skills to evaluate entrepreneurs in young tech startups?
Absolutely. I think in private equity, our financial modeling is very thorough. We have variables of everything that we can think of. In startups, it's impossible to do that. I mean, it's a revenue model. It's anything above revenues. The skill set.
Do you do due diligence? It's not just about analyzing balance sheets and income statements at all. There aren't
Yes.
any incomes to analyze.
There are a few things. We have the benefit being in Indonesia that other markets like China and India, to some extent, had seen similar companies went through a journey. I always said that it would be a lot easier for us to evaluate companies that have their peers in similar companies in China or India, so we could study it. But the other thing is that we have to have a major soul searching internally to change the way we evaluate things. It's not easy. We had to invite new partners. We have Henny, who is heading our digital initiatives from Google. So there's a whole mindset shift internally, but still, the DNA of what we have been doing in private equity is actually very helpful as well.
Is it more intuitive? Are you sort of, how do I feel about the management when you look at a young tech startup?
It is two things. One is that we have to make a hypothesis of, now it's a famous phrase of the unit economics. It's all about unit economics, the path of getting positive unit economics, and how much you are willing to back the company that has positive unit economics or clear path to positive unit economics to grab market share quickly, right? This is, Reid Hoffman coined this as blitzscaling and whatnot. The quality of the founder, I would say, is all about the founder. It's also very important. And because at the end of the day, we can only do so much, and things change very quickly. Companies have to make adjustments and whatnot. If you look at what we the famous story that I have with Nadim is that when we first founded Gojek, he came with a business plan. He said that the peak funding of Gojek until we become profitable is $2 million. I remember vividly, I told Nadim that I cannot tell you why you are wrong, because all your assumptions seem to be sensible, but I bet you it's going to cost more than $2 million. And things change. I mean, things change very, very quickly, and it's, we rely on the founders to be very nimble and to be creative and make those adjustments.
When you look at a young tech startup, oftentimes they tell me our biggest constraint is the human capital. So do you have to be much more operationally engaged with a young tech company than you would be with a more mature company in your private equity portfolio?
Yes and no. The good thing about, I always call our portfolio companies more digital companies than tech companies, because, we can debate what the definition of tech companies is. But the thing about most of these companies, these early stage companies, they have so much momentum behind them. So when you help them, you don't actually need a lot of heavy lifting. You just make some help, and the wave or the tide, whatever you call it, help the company propel. When you're working in late stage companies, you churn and churn and churn. The inertia for the business to grow is a lot more difficult. But the advantage of doing that in a big company is that you have a lot of resources, you have a lot of cash flow to play with, right? It's a different playbook. But yeah, I mean, I would say that in terms of human capital shortage, it's chronic. But you cannot replace a founder. You can help the founder to find talents. We actually have investments. We have tech platform investments in India, where we help our startup companies to find engineering talent, specific skill sets and whatnot, but it doesn't replace the necessity of the vision of the founder and the clear idea of what he or she wants to build.
I mean, you've had so much experience in just the last 5 years, or just under 5 years. What do you think is the most, to the extent that you can generalize, when you look at a successful young company, what has been the most important competitive advantage? Is it being local rather than outsider? Is it having more capital in the sense of a Grab, say, which has so much capital from a SoftBank? Is it the quality of the vision of the entrepreneur? What do you think is the key factor in differentiating, a successful startup compared to those who may fail?
The two most important things are the business model and the quality of the founder, the guy who is running the business, right? I mean, if you catch the right model and there's so much momentum and you have a good founder behind you, things are a lot easier. I have seen good founders in the wrong business model. It's an uphill battle. Capital helps to some extent, but I also am of the view that too much capital, and this is the debate today, is also not productive, especially if you use the capital for predatory pricing and unethical business practices. The important thing for a founder when as he's building his company and making sure the balance sheet is strong enough is actually to find investors who can really help him or her. And in every situation, it's different.
So let's talk about that last point. I spend a lot of time in India. And if I talk to startups and ask them, what have you learned as you think about whose capital to take? One of the things that Indians say, because there's a huge shortage of domestic risk capital, is the biggest mistake I made was choosing VCs who give me the highest valuation. And at the end of the day, valuation can be a trap. If I go for the highest valuation, the chance of a down round is much higher. Yeah. From your point of view, do Indonesian entrepreneurs choose their investors wisely? And what should be the most important factor for young entrepreneurs in choosing whose capital to take?
I see three types of situations in funding round, right? One is a situation where the company has so much choices, there's so much money being thrown at them. The second situation is that it's a balanced situation. I mean, they can raise the money, but the entrepreneur really has little choice in terms of who he or she can bring to the cap table. The other one is a situation where it's a struggle, and they have to find, work very hard to find. There's no choice. Yeah, I think in the most successful companies, I would say, is somebody who can really project in terms of like what kind of help he or she needs. But I have seen situations where people get carried away and valuation, they want to be the next unicorn or to be the first $100 million. The headline is so important. And as you say, I always caution our companies in this situation that don't be carried away, because once you have this expectation being so high and you cannot deliver, down round is very painful, and it may actually lead into a situation where you cannot get any funding, right? So if you look at Gojek, for example, it's one of our portfolio company where they were very disciplined to make sure that valuation didn't go too fast relative to their underlying business.
That's a great point. And speaking of Gojek, let's talk about exits for a minute. How easy are exits you know, you have sold down some of your stake in Gojek, for example. Are exits generally challenging or no?
My view about exit is that if you have good investments, it's very easy to exit. If you have bad investments, it's very difficult to exit from those investments. That's my general comment. And the thing is that within our portfolio, early stage portfolio, our DPI is actually a lot higher than our traditional PE investment. So we actually have returned more dollars to our investors from our early stage investments than from our private equity. But it's all driven by the performance of the company. And for us, we have to find a balance between maximizing return and also managing our risk, right? So the fact that we sold down our stake in Gojek, we only sold down to recover the principal that we put in the company. We still have a big exposure. We are still very involved, but we have fiduciary duty to our investors to make sure that their capital is also managed properly from risk perspective.
One of the reasons that I was so happy to do this with Patrick is that a lot of your investments in early stage companies are very sort of impact investing, ESG focused. So you are focusing on sectors like education, like microfinance, healthcare. Can you just talk about one or two of your investments and, for example, what you hope to do with your bank and why you invested in that?
Yeah. So we, as a team, is betting on the Indonesian consumer story. And if we look at the composition of the market, the biggest market is those who are in the bottom of pyramid. Right? And we coin it as the mass market. That's what we have been investing from very early days, whether it's Alfamart, Indomart, BTPN. We have always been focusing on this segment. And if you look at the need of our brothers and sisters in that segment, it's really basic services, basic products, right? And if you look, we also take a view that if we deliver good quality, affordable products to them, it not only benefits us as an investor, it also benefits the society, it benefits the country. So if, for education, we were, this private fund that we own, we were also an investor in Ruang Guru. We saw how the market develops. We wanted to do more in education. The whole sector is still very small. I went to an EdTech conference in Beijing in November. In the city of Beijing itself, there are 3,000 EdTech startups, right? I mean, in Indonesia, we don't see more than 13 maybe. The need is there, and then it's so, and the country needs it, the market is there. And for us, we've been struggling to find who we can back in this sector. In terms of the financial services, we are working with the same team from BTPN, and we saw an opportunity that there is the Indonesian banks, as they are structured today, are not equipped to fully service startup companies, especially those in financial services, in fintech. And we want to be the capital provider, we want to be the balance sheet partners for those people. But we also need to run the bank very differently. We have to be very cost conscious, we have to be very efficient. So we spent a lot of time designing the architecture and whatnot to be able to do that.
So, obviously regulation does play a huge role, both in creating opportunities and in limiting opportunities. From your point of view, how would you assess, the government's role? Is it supportive enough? Is it experimental enough in sectors like finance or healthcare or education?
So we are lucky that on the top of our current government, the president is very much supportive of innovation and all these early stage companies. When Gojek first launched, I introduced Nadim to the president. They built a relationship, and the president saw what we were doing. So when his ministers decided conveniently to ban all ride-hailing services overnight, the president was the one who actually reversed the rule, and it was probably one of the shortest-lived ministerial decree. So we have been lucky in that sense that there's a support, but it doesn't change the fact that you need to be in constant contact with the regulators and to build relationship and to inform them as to what you are doing, right? Very early on, in ride-hailing, we raised an issue with the concern with the government that if the practice of the fact that drivers are taking less than what drivers is taking more from ride-hailing companies than what the consumers pay. At the end of the day, this game will cease, and the biggest victims will be the drivers themselves, because they have been living on artificially high income. They adjusted their expenditures accordingly. They borrow money and whatnot. At the end of the day, the government will lose out. These people will lose out, and it will become a government issue, right? So that's one thing. The other thing is that on financial services, I actually applaud our Financial Services Authority of being open-minded when it comes to innovation, P2P. We have a partnership with a leading Chinese company in online lending, and we often discuss that it is very important, learning from the Chinese experience, for government to come in and regulate the sector early enough without choking innovation. It's a fine balance, because what happened, and this not only happened in China, it also happened in here. If you don't regulate, there would be market abuse, especially when you collect money from the masses, and when abuse came, customers, investors lose money, customers got hurt. They go to regulators, and the regulators would clamp down so fast, right? It's much better for us to have like a measured regulations to make sure that these unethical practices don't happen from very early days.
How protectionist should the regulation be? There's a lot of concern in India, say, where you have foreign companies dominating, say, e-commerce, right? But then you see increasing rules, that help the local companies against the foreigners. Do you favor, regulation which supports the local companies against foreign players with far deeper pockets?
I favor fair market practice in the sense that nobody should be able to throw money and dominate a country and thinking that, just because I have more money, regardless of my quality of product, of my innovation, I can buy this market and I kill the local players, right? But that is not new. That's why there is anti-commission against monopoly, against cartels and whatnot. That we had seen that before, but that's something that we always urge the government to pay attention. But it doesn't mean that the government should protect, quote unquote, and prevent foreign players to come in. As long as they play on a level playing field, we actually welcome competition. And as we always say that pound for pound, if we have a choice of backing a local entrepreneur versus a multinational company with branch here, we would always side with local entrepreneur, because the focus and the understanding of the market is way different from companies that operate thousands of miles away from here.
We have less than a minute, so one final question. You and I have talked about the fact that given its potential, Indonesia should be growing more than its current 5% rate, especially given its young demographics. To what extent can these young companies make a big enough difference overall to Indonesia in generating income growth, in generating job growth?
I think it's immense. Technologies, this digitalization open up all kind of opportunities for people in the bottom of the pyramid. People suddenly have access to additional incomes, access to information, and this eliminates a lot of middlemen in the system. We are getting rid of a lot of inefficiencies, and we are going to. There's a speculation out there that we are going to make a big investment into a company that we have backed from a long time ago as a private fund, which is e-fishery. E-fishery has doubled the income of fish farmers in Indonesia in areas that they operate. Right? And this is what the government has been trying to do with a lot of different things, but here come like a young guy from ITB with this product and service, and then he just scale it up. And our focus now is to see how we can help to scale this product up to millions and millions of fish farmers. And the product now is not only in Indonesia, they are in Vietnam, they're in Thailand. I was so impressed that in Thailand they are partnering with Siam Cement Group. I mean, it's for those who understand Thailand, there is no bluer name in Thailand than SCG.
Thank you so much.
Thank you so much, Patrick and Henny.